Hi, I'm Sarah Benwell, the editor of InsuranceInvestor.com. I'm here with Tera Allas, Director of Research and Economics at McKinsey. Tera is speaking at the Insurance Investor Live Summit in November, and ahead of that, we wanted to catch up with her to get a flavour of what she'll be talking about. Hi, Tera.
Hi there, very good to see you.
You too. So my first question is, are we on the precipice of an inflation event?
Well, we almost certainly are, even though I think it's really important to kind of think about the different components of it separately, because there's almost three separate questions here. First of all, are we going to get a lot of inflation? Secondly, how are central banks going to react to that if we do? And then thirdly, how does all of that interact with fiscal policy? And so if I work backwards, I think this is probably the first time for a long time that fiscal policy and monetary policy will have enormous interactions. And I can already see governments on the fiscal side thinking through, well, what might be the monetary policy response from those, independent central banks where they are independent. Because those two levers are very different in a kind of COVID environment. Secondly, how will the central banks themselves react? Well, we've seen quite a lot of them, most of them in the developed world anyway, kind of keeping their nerve and saying, all this inflation is transitionary, we're not going to raise rates, we might taper down some of the asset purchases, but generally speaking, kind of taking it really easy, which to me sounds very sensible in an environment which is totally unprecedented. We don't really understand fully what's going to happen with the real economy, given that it's being created by COVID. And then thirdly, will we actually see a lot of inflation, and how sustained, how endemic will it become? I think is still up for debate. You need to look at supply and demand separately, and it's absolutely clear that both of those will be driven still by the virus. What happens with the Delta variant, what happens with vaccination programs, to what degree do people feel comfortable that we've reached some kind of level of herd immunity? Most of the epidemiologists now that think it's not just kind of on a global basis, not possible to reach herd immunity, and therefore we're going to be in a world where we're managing the virus rather than kind of we've eradicated it. And I think that means that both on the supply side with supply chain blockages and various disruptions, and on the demand side with, on one hand, lots of savings, but on the other hand, kind of a lot of hesitancy, there will be kind of like a roller coaster ride. So whether that then feeds into long-term inflation expectations, I think is absolutely not clear. My personal gut feel is that there's a little bit less of the sort of pent-up demand than perhaps many economists think. There's a lot of hesitancy for people to go ahead and spend the money that they have. There are a lot of people who don't have any money. And so, unless the fiscal policy environment remains incredibly accommodative, then I suspect there'll be a little bit less aggregate demand than many people think in the coming sort of couple of months and years.
Great, thank you. Okay, and then what sort of strategies can asset owners use to avoid some of this inflation risk?
Well, first of all, I'm not sure it's possible to avoid it. You can manage it, of course. You can be aware of it. I think it's not necessarily the case that, inflation is always bad for all kinds of investments, especially because it does depend entirely on those policy reaction functions, both from central banks as well as governments. And so I would almost look through the inflation to, well, first of all, what are the central banks and especially kind of fiscal policy decision makers doing? Because that's kind of where the money is going to flow. And our advice would also always be to look through the kind of monetary phenomena to fundamentals. So, for example, are there sectors or asset classes where inflation doesn't erode your bottom line quite as much as in some other places? So, for example, if your demand elasticity is very high, then you're not going to be able to put up your prices as much as a business, for example. Whereas if it's, you'll probably be able to pass on the extra costs to your consumers and you'll kind of be fine. So your bottom line will be fine. So you don't have a double whammy from eroding profitability and then higher interest rates that might reduce your valuation. So I think there are going to be pockets of inflation secure places in lots of different asset classes. And I think it's that kind of granularity, so looking beyond the immediate obvious to where you probably find the better opportunities to not avoid, but to manage the risk of increased inflation. I mean, up to a point, most of that has already been priced in. And so it's just staying ahead of the curve and being very aware of this kind of unusual feature that, you know, a lot of the real economy is driven by what's happening with the virus, and therefore almost like following what's happening with that is going to be the leading indicator.
Great, thank you. And that leads nicely into my last question. So you talked about opportunities. How can insurance investors make sure that they're taking advantage of the opportunities that are out there, given everything we've talked about so far?
Of course. Now, I think there are probably like short-term and long-term things to talk about. I mean, I already mentioned a lot of the short-term things you'd want to be doing, just kind of literally watching the policy responses that we might be getting. But I think in the kind of medium to long term, COVID has obviously changed the economy very significantly in some sectors and not so significantly in others. And so I think that is where there are going to be a lot of opportunities. So many governments around the world are going to continue to spend money to build back better. And that will create enormous demand for certain types of products and services, especially like, let's say in infrastructure, but also, you know, in various different health related services. Secondly, of course, if and when, due to COP26, which is about to take place in a few weeks' time, there continues to be momentum towards the green agenda, and that actually ends up being realized in specific policies or government spending proposals, then there's another enormous CapEx wave waiting to happen around green infrastructure, around green energy. And so being positioned to invest in companies that can benefit from that will obviously be a kind of long-term theme as well. And then finally, I guess, you know, digitization and automation will continue apace. You know, they've kind of been almost like kicked into an even higher gear as a result of COVID. And so this is not a generic, you know, statement about which sectors will do better than others. I think it's going to be a question of which businesses within which sectors. So again, it might require that kind of level of granularity of looking at where are the winners in each sector. And I guess my final point in terms of kind of long-term strategy would be to think very carefully about what's your innovation portfolio. So to what degree are you just investing in very, very, very safe things? And to what degree can you actually diversify into things that are kind of of the future, and maybe not put a lot of investment into those, but start to look for some kind of higher yield, higher return opportunities. Obviously, you have to do it as a portfolio because these things are also risky and they depend on a lot of things that you might certainly will not be able to control, but might not even be able to predict, like, you know, policy changes and whatever. But we do see an acceleration of innovation and an acceleration of value creation from innovation. And so if that is a theme that you can play into your investments, then I suspect it might provide better longer term returns.
Lovely. Thank you so much. I can't wait to hear more from you at our conference in person in November.
Thank you very much. I look forward to it.